So as many of you know, we're defined by our business model. Everybody here knows, I believe if you're in this session, that royalties are phenomenal financial instruments. And the way we choose to grow our royalty portfolio is unique in the business. We focused on royalty generation for 20 years now. That's the prospect generation business model focused on the royalty component. And I'm happy to say that we've sold over 100 projects in the last 5 years executing that royalty generation business model. That just creates deep optionality within the portfolio, building dominantly early stage assets at the bottom of the pyramid. To augment that portfolio, we also buy royalties. There's some key royalties within the portfolio that we've purchased. And we'll review those in a minute. And then the other thing that we do that makes us unique is our strategic investment track record is quite solid. We've made over $50 million in the last 20 years and reinvested those monies right back into the portfolio, buying royalties and funding further royalty generation work. You probably heard me say before that we're the most prolific royalty generator. This graph puts out there's the companies I have a lot of respect for. I'm not trying to bemoan them in any way. But this shows all of the project/royalty generators that are publicly traded in our space and the number of projects that have been generated over the course of the last 5 years. This is our hedgehog. This is what we're known for. And I will point out that the monies that we invest into royalty generation that put assets on the books are expensed on a quarterly basis. So this is creating new royalties and showing up as expenses, and then the assets go on the books at a de minimis book value. That's an important counting difference relative to our competitors who dominantly buy royalties and then capitalize those expenditures. And so it looks different on the accounting sheets. Just make sure that everybody understands that. I'm continually feel like I need to explain that to people. So this has resulted in a portfolio close to 5 million acres worldwide, 277 mineral property positions. As I said, it's a combination of assets that we've purchased as well as assets we've grown organically. I'll go through and briefly talk about some of the most significant assets within this, but large claim ownerships of dominantly early stage assets in central and eastern Canada. We touch over 12,000 mining claims in the western United States, including the Leeville mine operated by Nevada Gold Mines, and Barrick is the operator of Nevada Gold Mines. That's a long-lived asset. It's paid $25 million since we've owned it, currently paying about $2.5 a year, all USD. And we can do financial analysis and talk about what these cash flows are worth, but the real reason why you want to own a royalty portfolio is discovery optionality. So I'll highlight some of the key discoveries that are going on that exemplify the value that we're creating by building this deep pyramid. There's 100 kilometers of drill holes a year going into our early stage projects. That's not including the advanced stage assets at no cost to us, creating that discovery optionality. The previous speaker mentioned the importance of that, and that's a key aspect, and that's why you want to own royalty companies and royalty portfolios. So within North America, recent discoveries include Park Salyer, that triggered a $3 million stage gate payment to us. The ongoing discovery at Peak in Arizona, that's being advanced by South 32 as another example. Moving on to South America, our largest cash flowing royalty at this point in time is the Caserones mine. Top line revenues to us pre-tax about $10 million a year. We do see some production upside here. We're delighted to see Lundin Mining Corporation take over as the operator of this asset. This is a generational copper molybdenum asset with multi-decade mine life, and Lundin has been touting the exploration potential on that property of recent, in addition to the potential to increase production. That's why you want to own royalties, and it's a key asset within the portfolio. It's one of the two generational copper assets within this portfolio that we can utilize to really build this company. And then with respect to ongoing discoveries in South America, delighted to see the work that Abra Silver is doing at Diablillos, where they continue to find new ore zones and knock off some fabulous drill hole hits within that silver, gold, and now some copper mineralization being delineated as well at Diablillos with the new zone they found at Jack and North Jack. We're delighted to be a participant in that. Moving to Fennoscandia, we're the largest mineral rights holder of any company in Fennoscandia. touching thousands of licenses within Norway, Finland, and Sweden. Many of these are early-stage assets that are being advanced by a host of different junior companies. Importantly, the Viscaria mine, which is the copper and gold portion of the IOCG that exists in the Kiruna district, which is the large iron-producing region of northern Sweden. That mine is a past producer and it will be back in production late next year, they tell us, so they're having just received the final permits for that. So we're delighted to have that as the next production royalty within the portfolio. I'll highlight one particular discovery recently announced by Kendrick Resources, where we have a royalty, at the Espeladden property in Norway. That was a nice sulfide nickel, copper, cobalt hit, 11 meters of over 3% nickel and 1% copper and a nice cobalt credit. Nice hit there. I encourage you to follow that story. And it's just another example of deep portfolio embedded optionality here within the EMX's assets. Moving on to the topical discussion of Timok. Last year when I came here, I told everybody that the Timok deal is forthcoming. Don't worry, it will happen. I've been saying that for a year and 9 months. I'm delighted to say that we've made an amicable settlement with Xinjiang. I'll point out that in all truthfulness, Xinjiang was honorable to work with. And happy to have this settled at a 0.3625% royalty over this truly world-class asset. We received all of our back royalty payments, which accumulated up to $6.8 million. At the current pay rate, it's paying about 3.8 to 3.9 million, whilst they're mining in the upper, smaller, high-grade upper zone. They're doing development work to advance the lower zone and have announced a capital expenditure to advance the whole district between 3.5 and 3.8 billion additional dollars. They've already put in about 800 million. All indications are that this is the mine life here will probably be measured in fractions of a century. It's a huge endowment. It's the kind of asset that you dream about having a piece of. And this is the second large copper asset within the portfolio, generational copper assets that really provide an excellent base and have helped transition EMX from a junior company that's been building a royalty portfolio to a mid-tier company with strong cash flows. So, delighted to have that deal done, and the new royalty agreement was very well written, in my opinion. I told our attorneys it's better to get it right than fast. I apologize to shareholders. It did take over a year and a half to get it done, but it's done now. We've got the money in the bank, and now we have a good royalty agreement that won't be disputed in the future. Moving on to Turkey, where we have 2 nice producing assets and a couple more coming into production in the near term. Balya, I have overstated to you many times about what I expect the production to be there, and I'm delighted to say that it is now in production. It's paying about $100,000 a month right now. With the current mill capacity and the size of the resource there, we're confident that this will become, as I have said in years past, a multi-million-dollar per annum cash flowing royalty, lead, zinc, silver. We do have a 4% uncapped, unviable royalty on that. And this is a good example of the power that is created of generating royalties. I bought this license for $17,000, sold it for $100,000 and a 4% royalty, and now it's paying over $1 million a year with more than a decade of mine life in front of us, and I think the production there will likely double, if not triple, over the course of the next few years. It's a great example of the exceptionally astute allocation of capital that royalty generation is. And it substantially trounces the rate of return of purchasing royalty assets at premium prices as we see them trade in the market today. Gediktepe is a nice payer for us. Right now, the mine life there is fairly short in the upper oxide zone where we have a 10% royalty. We'll see those incomes likely tail off over the course of the next couple of years. About a 3-year mine life left there. But then the sulfide circuit, we're confident will come into production, where we'll have a longer life 2% royalty on that, which is copper and zinc dominant. We're happy with our 4% ownership of premium nickel as a strategic investment. We definitely are bullish nickel, seek to become long nickel. It's not an easy commodity to gain exposure to. We do have a lot of other earlier stage nickel assets within the portfolio that if you follow our press releases, you've seen that we sell those off. The Esplanade was a good example. So to reiterate, Caserones and Timok are two generational copper assets now that really form a strong base for the company moving forward, with strong cash flow coming from both, huge exploration discovery upside here, and production increase upside, with strong operators. Mr. Sheong Cheng at Xinjiang said to me at PDAC when I sat down to talk to him as we were nearing the end of the negotiation, and he said, "Dave, you are very fortunate to have Xinjiang as operator of this property." And what he's referring to is the fact that Xinjiang knows how to get metal out of the ground. The rate of speed of which they were able to develop that upper zone and are currently developing the lower zone eclipses what many of their competitors and Western companies would have been able to accomplish, and speaks volumes to their dedication to become a major mining company. And we're delighted to be a participant in that. Likewise, Lundin's a great operator to have it. So moving on, I'm running out of time here. So, our cash flows are increasing. There's some one-off cash flows, such as the settlement with Barrick about the lawsuit on the Carlin Trend. That was reinvested into our portfolio. Very importantly, the strategic investment window we had 2018 have been big cash events to us, but have been non-recurring. Now we're seeing recurring income within the portfolio growing and reaching that tipping point where we're distinctly positive cash flow. Roughly 50% from base metals and 50% from precious metals at this point in time. That's fortuitous. It's not designed that way, but I'm happy to have that diversification. We love copper. We love gold. As Mr. Bristow says, gold's the most precious and copper is the most strategic of the metals. So I've mentioned Balya, Gediktepe, and Leeville as strong assets that back up those two cornerstone copper assets within the portfolio. And the important aspect of the discoveries that are ongoing. This shows at Diablillos, where we have a 1% royalty at current silver price, but if silver price goes over $25, this moves to a 1.25% royalty. New discoveries at Jack, North Jack. And this is a royalty that we purchased but didn't pay much money for within a portfolio purchase. And now we're seeing these substantial discoveries. And this is why you want to own royalty portfolios. Get exposure to that discovery optionality. Another great example is Park Salyer. Ongoing discovery here. This is an ore body in Arizona that will see the light of day. Delighted to be a participant in this. And there's an upper supergene zone that is running 1% or more, but there's also hypogene ores being discovered at depth within our footprint. So that's exciting. Probably one of the most exciting discoveries ongoing on our property is the extension of the Taylor lead zinc silver deposit, where it zones into a higher temperature formation into a copper zinc silver zone, with multiple discovery holes now being advanced by South 32. Last hole was 326 meter% copper equivalent, right smack dab in the middle of our property position. I'll point out that we have a 2% royalty here that's uncapped and unbuyable. And speaking of astute allocation of capital, we sold this property for more money than we had in it, so it's on the books at a zero value. And this royalty was generated through our generation process. More than happy to answer a couple of questions in the few seconds that we have left, and thank you for your attention.
David, thank you very much. We've got time for one quick question, which I might ask, actually.
Sure, please.
Interested in your sort of capital allocation as your revenues grow.
Yes, sir.
How should we expect to see the investment in project generation versus acquisition of existing royalties?
Yeah, I get asked this question often. I'm more than happy to answer it. I don't see any big paradigm shift with respect to our business model. We want to continue to fund the royalty generation work roughly at the same levels as we have, but we'll have more arrows in the quiver with greater cash flow, and so those arrows will enable us to do additional royalty purchasing and strategic investment. So on a percentage of the overall enterprise, I expect to see royalty generation slightly decrease as the revenues increase, but the absolute value of that generation to remain the same. I think it's critical that we have these astute entrepreneurial economic geologists in the mineral belts around the world that are doing that royalty generation and also identifying the opportunities to buy royalties that are not going through process and make strategic investments when we are very compelled to do so, which have paid off handsomely for us in the past.
Thank you very much. Thank you, David.